Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, as usual, let's take a look at the gold market. Actually, as you can see on this chart, it's not much to say we could add to the previous analysis. Yes, today will be the Fed statement, so probably market also will feel some impact on this statement, but insensitivity to the results of the Fed decision probably will be less than on the Japanese yen. So today in the video we have discussed the possible impact of the Fed decision on the Japanese yen. Yes, probably gold market will show some reaction, but it will be limited, I suppose, because this demand on the gold was not due to the growing inflation in the United States or something of that sort, but this was run inequality. So this was the safe haven demand. And as the situation in the Middle East, tensions in the Syria has turned to some easing, so this coincides with the overall technical picture that market has reached some important levels, completed some targets. Market stands right now in the retracement. But gold mostly right now is driving in a longer term perspective factors that still stands valid right now. So the run inequality of the situation significantly hasn't changed in the global economy, and the tensions already they have eased, but they have not disappeared yet totally. That's why I think that the reaction of the gold market to the Fed statement will be limited. Today market doesn't expect the rate change, so mostly the consensus stand that rate should be changed and increased in the June session. Maybe some comments from the Fed will shake the market. Maybe some volatility will come on the gold market, but I think that this will be just as a result in the wide swings of the action, but hardly the price will change very significant. That's just my opinion. Although guys, to be honest, I am not, as you know, I do not trade the Fed statements as the data releases. This is not the way how usually I take the trades on the market. So from the one point of view, guys, you can see that market stands at daily oversold. That's why downward reaction. Maybe it could follow, but hardly it will be too significant. Probably it will be limited. An upward reaction could market reestablish the new upward trend based on the just Fed decision. Well, I'm not sure that really will happen. Besides, I mostly expect that Fed solution will be more dovish due to the policy that was taken by as European Central Bank and the Bank of Japan. So I think I just have explained it in the video dedicated to the Japanese yen, that I think that Fed will try in the nearest time to move out from the road of the rate hiking. So they will turn on the dovish road, although they can't do it obviously. So they will try to do this very smoothly. So first they will eliminate some statements from their usual comments when they give the hint on the June rate hiking. So they probably will turn to some they will not cancel the rate hiking but they will try probably to adjust the policy so that to turn to some postponing of the rate hiking as far as possible. So from the one point of view, they just will say that we do not cancel the rate hiking, but when we will hike the rate, we do not know. Something of that sort. That's just my view on the current situation. So today maybe some dovish hidden nodes will be introduced in the statement, and that probably could make the shy bearish impact on the bull market. Whether Fed statement could really trigger the upward action on the gold, since the inflation stands flat, the rate decision itself, if even it will be hawkish, hardly will significantly impact the gold market right now. So the gold market right now is mostly driving, as I said, different factors. That's why I expect that volatility will increase in today's session, tomorrow's session, but hardly market will show significant action in one or another direction. Maybe I could suggest that the downward action will accelerate, but market right now stands at oversold, and this will probably hold market for a very, very significant drop. That's why in the nearest perspective, I still think that we should follow our expectation of the deeper retracement here on the gold market to the downside. Gradual retracement. Maybe first market will form the head and shoulders here. Later we will get some kind of the ABCD to the downside. The market could really drop to 1160 area. It's also possible. But this will not happen too fast. It probably will take some 2-3 weeks for this action. And this is what a really technical picture suggests right now. Fed could bring some adjustments, but currently I do not know what Fed should say so that the adjustment should be real drastic. So let's see what will happen. On the following time frame chart, guys, as you can see, market has returned back in this consolidation and stands flat below this trend lines. Market has returned back down. On the hourly chart, guys, on the 1220 area, we have the pip support. So on the hourly chart, we have our double top pattern that we have discussed. You probably remember that. Okay, the target suggests 1190 of this pattern. Now market, as you can see, has broken through the neckline of this pattern and stands really stubbornly below it. So probably the daily oversold just doesn't let market to drop further. But at the same time, this looks like the bearish pennant is forming, and guys, this is some kind of the bearish dynamic pressure. Since then, market stands flat, although trend is bullish. That's why the downward action currently seems more logical. Situation very typical, very, very common to what we see on the Japanese yen today. So let's see what will happen. Again, guys, I just repeat the same conclusion that for us, since we mostly analyze the daily chart, for us is the measure to get the proper point for taking the long position rather to train overall setup in the short side. But if you have taken short position here, as we suggested on retracement on the slope of the second top, well, you probably right now feel fine, but be careful with this volatility that could appear today due to the Fed results. It's probably maybe you tight your stops or something of that sort. Well, in general, this currently looks promising, especially in the perspective of the possible this large head and shoulders pattern on the daily chart. That's why maybe this will work, and if you trade this on the bearish side, well, in general, this is you have the reasons to do that. So you have the patterns and the context for this trading. That just not quite corresponds to the daily picture and daily analysis. But if you're a scalp trader, that's also could be done. Why not? So let's see what we will get on the Fed meeting and how situation will change.